Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for June 2nd, June 3rd, 2024. I have a couple of housekeeping items that I need to go over before I get into what's coming up for the week ahead. One of them is about the sale. Obviously, we need to talk about it because it's the last weekend. But the other one, you want to make sure you stick around because it's about podcasts. So let's just talk about the sale really quick. We only discount our prices a couple of times a year for the last 7 years. And this one is extremely special because we are giving away a $100,000 trader funding program account, an assessment. So if you want to enter this for free, you have to claim a 30% semi-annual or a 40% off annual subscription. If you do that, you are automatically entered to win a $100,000 trading assessment from Trader Funding Program. Not on the buy 1 month, get 1 month free. But let me say this, your chances of winning are really good. It's not like it's a Mega Millions or anything like that, some lottery. This is amongst subscribers. You have a good chance of winning. So to enter, make sure you get your semi-annual or annual subscription. For those of you that are current subscribers, if you're like, well, I'm already on a current plan. Well, if this plan, you get a discount and this plan is better than what you're paying right now, make sure you take advantage of the offer. And this offer is only going to be up for this weekend, and I believe the second, well, that would be over the weekend. So make sure you take advantage of it right now. All right, the other thing. How many of you listen, show of hands, you don't have to because you're listening to this as a recording. How many of you listen to our daily shows every day, right? You have the Flow show that's free. That's our European show with Ryan Littlestone and K-Man. Or you listen to the F.A.C.E show, which is also free, where Dale Pinkert interviews a lot of different traders. Plus you get my analysis and Ryan's there, K-Man's there usually, and then you get our updates on what's going to happen for the day ahead. If you listen to those, but sometimes you miss them, well, I'm going to be doing a 5-minute podcast, just kind of getting you ready for the trading day in case you miss the F.A.C.E show. So make sure that you find us this week on your favorite podcasting network and look for the Forex Analytics, the day ahead show. It'll be just a quick 5-minute recap on what's happening for the day and what we're looking to do. So in case you miss some of the live shows because you for whatever reason, you'll have a podcast that you can listen to that at least get you up to speed. So make sure you listen to that. It'll be like a quick 5-minute podcast, and those are going to be launched this week. So check it out. All right, let's talk about what's going on this week. So this week, it's obviously jobs week, right? It's NFP, the Canadian jobs report, but we also have the ECB and the ECB and the Bank of Canada. They also have their rate decisions this week. Obviously, the ECB, the market's pricing in a move. That's going to be a big deal. But that's it's getting volatile because we're getting U.S. data that's coming in. When you're talking about jobs data, we get both ISM components this week. JOLTS data, U.S. Employment claims, ADP data. So there's going to be a lot that could knock the U.S. off of the U.S. exceptionalism mantle, if you will. So it's going to be a really important week for data. Also, there's a couple elections. If you guys didn't see it, we had the South African elections, and the election results were as expected. The ANC is losing its majority. It's also going to form a coalition with the DA, Democratic Alliance, I believe it is, to form a majority, and that was expected. So shouldn't get a big reaction in the South African rand, but in Mexico this weekend, actually, as of today, the election has started, and it looks like Mexico is going to elect its first female president. And so we might see some volatility in the US dollar Mexican peso. Now, I'm going to just pull up the dollar mex really fast because I think it's really critical in what's happening here. What you're going to see is the dollar mex is stalled at our resistance. Remember, these charts that you see here are the ones from the week ahead. And so what you see is what I drew either last week or the week before last, or I only fool with them or mess with them here. So you can see how we've just rejected this sell zone. It's a 38% retracement, but it's pretty important why we're there and how important this resistance is. Because I'm not a Mexican election expert, but I know that there could be some reforms in place which could have an influence on what the peso does. Now take a look at this major trend line that we are brushing against right now. Now remember, last time we rallied above here, we spiked above here, we couldn't hold it. But if we get a foothold above the 200 DMA, you can see it right here, the 200 DMA, and that 50% retracement, and really it's 1715. If we get a foothold above there, we are going to see a recovery in the US dollar Mexican peso. One of the things I love about a chart like this, how many of you, let me see if I can pull it up really fast. Let me see if I can, how many of you are familiar with what the Wyckoff accumulation distribution patterns are? Well, I'm pulling this up for you right now because what you're going to notice here, let me just go ahead and highlight this area. You guys see it right there? That is the same pattern that you're going to see right, and where's my drawing tool? Oh, there it is. Okay, so let me move that a little bit more. And I'm going to put that back up. You're going to see the selling climax right there. That would be right here. Okay. Then you're going to see us spring. That was the spring right there. This is the spring. You guys see it? Great. You guys are learning something new today. Hope you're liking it. All right. You can see the low volume failed sell off. Boom. Right. And now we have this major yes, I'm going to patent those sound effects, accumulation phase and breakout. So this is a classic Wyckoff pattern setup, and I just noticed it this morning when I was preparing for this video. It's a Saturday morning. I was looking through my charts and preparing this for you guys, and I'm like, wait a second, that is a Wyckoff setup, and it's happening around an election, which could have major reforms, which we could see some significant Mexican peso weakness. Now, it might not only be that. We could have risk aversion. We could have a Trump president. We could have a Biden president. We could have, who knows? But there's could be a lot of reasons why the dollar flies on a breakout above this resistance. So with that being said, guys, I want you to pay really close attention to this Wyckoff accumulation pattern following the Mexican elections this weekend. All right, now I know I've rambled on a lot. Let me go ahead and just mention this. If you guys like these videos and you think they're beneficial to you, make sure you give us a thumbs up. For my team doing all the editing, posting the social medias, getting this out so you can see it throughout the weekend, so you can be prepared for your week. Give us a thumbs up. If I missed something, jump down in the comments below. Let me know what I missed. Maybe you have a different view than me. That's fine. That's what makes a market. Jump down in the comments below, and then also a thumbs up. Subscribe to the channel. Subscribing to the channel is free. You talk to a lot of people that are, maybe a generation older than myself. I'm in my 50s, but some of you that might be a little bit older, and you might be unfamiliar with YouTube. Subscribing to a YouTube channel is free. So subscribe, clicking the thumbs up, that's also free to do. And comment, those are free as well. So, and I know a lot of you are going to use that freedom to comment down below. All right, so this week, or actually, let's talk about a little bit of last week, and let's just discuss that. And remember, we are actually these videos are chaptered, so you can go across the timeline down below and select the places that you want to go to. So just remember that as well, especially if you watch this a few hours after it's been released. All right, so last week I do want to talk a little bit about the S&P, because the S&P at the very end of the day was, I like to call it, saved by the bell. There weren't enough sellers. Buyers end of month drove up the S&P price, but notice where we closed. We closed right at, and this is the green line, we closed right at the breakout point. So what does that mean? Well, it means that we had a false breakdown that could set us up for a rally. I think we're at a very critical level in the S&P, but the good news is I think that we're really kind of set up. Oh, here, let me do this for a breakout, either direction. Now, I mean, it's the levels are clear. You know, you break below the 50 DMA, it's a breakdown. You break above these highs, we are going much higher, I would think. All right, so your levels are set when you're talking about the S&P, but also that end of month flows, it really left the dollar mixed. But at the same time, I think the dollar looks very vulnerable, and I'm going to talk more about that as we go through this video. And then, you know, obviously with last week, I think everything's kind of setting up. So let's fast forward. Let's go into what's happening this next week. So on Sunday night, and let me get rid of myself so you don't have to see me here. Sunday night, we have China. You know, private sector, CACs and manufacturing PMIs. Focus on that because I think it's going to give us a little bit of a flavor in what's happening with the Aussie. Now, as you all know, the Aussie is up against really, really major resistance. I think I'm going to move this because we don't need that right now, and we can just kind of zoom in this area, right? You can see that the Aussie dollar, and I don't even have to put any fibs up here just yet, I'll say that. But you can see how important this resistance is. And then you can also see the 200 DMA and the 50 DMA are going to provide plenty of support down below. So I think that the Aussie is fairly trapped. Now, remember, we have Chinese data, and Chinese data has looked a little bit better in recent months. So, you know, things are kind of stabilizing in China. Do I think China's turned the corner? Not too sure, but we are going to get Chinese data all week because we have Tuesday night, which will be Wednesday morning, we have their services PMI, the CACs and services PMI. Also, we have the Australian GDP on Tuesday, or actually it's Wednesday morning, Tuesday night for those of us here in North America. But the reason why I'm pointing out the Aussie is because I think the Aussie is set up for a pretty big breakout. If you take this high right here to the low, you'll see we're consolidating around the 618. What that also means is, let me remove this and let's change it. If we break above that trend line, we were probably going to see a significant rally in the Aussie dollar. So, you know, you take what's happening in China throughout the course of the week, and then all the data that's coming out in the US, which could be set to disappoint, you could be setting up for an Aussie pretty big breakout this week. All right, moving right along. Monday, we have the ISM manufacturing PMIs. All right, so let's take a real close look at the dollar, and let's just focus a little bit on that dollar index and how important the 200 DMA is. Now, remember, the dollar index, by the way, is the one chart. There's a couple of them that we use here on the week ahead video that I actually use throughout the course of the week. Now, remember, if you want our analysis throughout the week, you could just go right here to basic technical analysis. You can see that exact same chart. You can see what I've said about the dollar all week long. We delete this at the end of the week and then we start over again, so it's just not scrolling pages and pages and pages worth of analysis. But you can see what my thoughts have been throughout the course of the week, because I do the predominant basic technical analysis on Forex analytics on all those 30 instruments throughout the course of the week. You're going to see predominantly my analysis, but you also see Ryan Littlestone. He's been posting his stuff here as well. So anyway, this is like a universal chart, so you can see how important the 200 DMA is here on the dollar index. Like I said, I think it looks pretty vulnerable, the dollar itself, and a break obviously below like 104.20 is going to be quite bearish if we start doing that. And then you can see it's going to pick up steam towards that triangle support, which will be down towards 102. Flip side is, you know, we get above the 50% retracement right here. Whoop. Oh, here, let me do that. I'll just do that right there. Okay. This level right here, you start breaking above that high, that low, the 50% retracement, that's going to put the upper end of the triangle in play, which will be right here around the 106. Now, I'm not confident that the dollar is going to break down this week, but it looks vulnerable. And if you just sprinkle, like salt and pepper, you sprinkle a little bit of weak data on the U.S. Dollar, you know, you've got a recipe for a breakdown. So that's something that we should be paying attention to. ISM manufacturing PMIs Monday, Tuesday. Now we have to really talk about this, and we have Swiss CPI. Now, what we've seen is we've seen a major reversal in the Euro Swiss, and I'm 99% sure last week we talked about how important the Swiss franc was, because this was the butterfly pattern that I drew up basically back in December. It's looked just like this since December or January of this year. So we're talking about 5 months ago. We finally hit the target. I haven't changed this pattern here. You can go back every week and look at this Euro Swiss that I've talked about it over the course of the last 5 months, and we finally hit it. It's really critical, but more importantly, it's what Jordan was saying last week that seems to have stopped the Swiss franc from going down near term. But we do have Swiss CPI. So focus on that, because if inflation comes in a little hot, what you're going to see is you're probably going to see more of a reversal in the dollar Swiss below the 90-cent level. Look how important this 90-cent level is. You know, you break below 90 cents, it's actually 89. I think I have it marked up as 89.90. 89.90 in the dollar Swiss. This is the bias chart that I make with it's a private show that we do with the Forex Analytics subscribers called the Morning Edge every day, and we look at all of these instruments, come up with the key levels, put asterisks next to the ones that are very important, and you can see 89.90. I hadn't marked it up with an asterisk yet because we weren't very close, but now that we're really close, you have to realize that a break below that level is going to open up some downside. But I'm going to look at it as a very welcome situation in the dollar Swiss, because if you go back to December of 2003 or January or February of 2024, I've told you that the dollar Swiss, or excuse me, the Swiss on the short side would be my predominant trade of 2024. I have actually capitalized quite a bit on being short Swiss francs over the course of the last 5 months. And this might give us an actual reset of this chart, which would also look something like this, in my opinion, if it really develops. And I'm talking way early right now, but you know, to see us do something like that is entirely possible, especially if we get some severe dollar weakness this week. So just keep that in mind. If you are trading the dollar Swiss, you know who I'm talking about. I'm watching you, or hope you're watching me. Anyway, watch this chart, because a break below 90 cents could be quite bearish for the dollar Swiss near term. But I am looking to buy dips in the coming weeks and months ahead. All right, moving right along. Tuesday, we have JOLTS jobs data. Tuesday night, like I mentioned to you, we have Australian GDP. It's actually Wednesday morning, and I already went through the Aussie. We have the Caxton Services PMI for China. So it's the manufacturing, private manufacturing data on Monday morning in China. Wednesday morning in China will be the services PMI. Wednesday, we have ADP. We have the private sector jobs data, so we're going to have to watch that. Matter of fact, what I should do really quick is take you over to the dollar yen, because the dollar yen might be probably the most influenced by this, by all the jobs data this week. Take a look at the dollar yen. Now, I was looking for a move to the 78% retracement. We didn't quite make it, but I'm going to redraw the way I had the Gartley pattern drawn out like this. The Gartley pattern might actually be here, and the reason why I show you this is because there's a 127% extension. Now, that might have done it. So the fact of the matter is, if yields fall, the data is weak. Let's talk weak ADP data. If the US dollar Japanese yen starts breaking below, 156.40 here, or I had 156, and maybe because let me just show you really fast. I'll tell you why I have that as 156. Because That is, here we go. That is the 38% retracement. We start breaking below the 38% retracement. Let me delete this one. We break below this 38% retracement right here. That's probably going to set off some downside. So I'd be watching the dollar yen, especially if the US data gets weak. Am I going to say this correctly? Gets weak this week. It weakens this week. Weak, but weak with the EA versus EE. You guys, you know, all right. 156, really key support. All right. Also, what's happening on Wednesday? Now, this is interesting, and some of you guys don't know this, but we have the Bank of Canada rate decision. Now, take a look at the dollar CAD and look at the price action in the dollar CAD this week. Really critical support we're coming back into. It's obviously 136. Now, the Bank of Canada, they moved their rate decision time on Wednesday. They do it like 15 minutes early so it doesn't coincide with the US data. So, you know, it's so weird that they did that. But anyway, their rate decision is at 9:45 a.m. Eastern. And then they have their press conference 45 minutes later after the US ISM services data comes out. Now, I want to just focus on the dollar CAD because I think this is such critical support. So the reason why I'm pointing this out is because we can actually narrow this down and say this is where you start thinking about what is vulnerable. Now, I am just so you all know, and I think most of you know this, I am more of a Canadian currency bear, but sometimes you could be more of a dollar bear than a Canadian currency bear. Now, I believe that any move down in the dollar Canadian will be bought on dips, but that doesn't mean we can't dip. Markets are two ways. They go both directions, and especially in currencies, that's one of the reasons why many of us really are drawn to currencies, because they get a lot of two-way price action. For traders, it's great, you know. So we could get a flush of these stops below this 135.90 level and take us down towards, whoops, that's not what I wanted to do, take us down towards 135. You can get a stop loss flush, and overall, you know, longer term, you know, the dollar Canadian could do something like this and then move back higher again. So right now, I think we got to watch the Bank of Canada, even though you know, they are not expected to. They are expected actually to cut rates, but if they're more one and done, excuse me, then you know we could actually see a buy the rumor, sell the, or it would be sell the rumor, sell Canadian dollars, buy on the news, which we might get some Canadian strengthening, especially if the market walks away with a one and done type of scenario following the Bank of Canada. All right. Moving right along, Thursday morning, we're going to have the ECB rate decision. So we should be talking about the euro, because the euro is obviously, I think this is our drawing from last week. Yeah, we're like, hey, a break above 109 would be bullish. That's what we'd see. How about I do this? Week 2, let's just leave it. I mean, the market is expecting the European Central Bank to cut rates. And by the way, going back to the Bank of Canada, they might not cut. I think the market's expecting them to cut, but they might not. Anyway, ECB though, they're expected to cut. But this is one of those, the market knows it, and it's been very well telegraphed, and we know it's coming. But will the euro rally even if the European Central Bank cuts rates? It's entirely possible, because they could be in that one and done camp, and so that could put the euro above 109 towards that 110 major triangle we talked about last week, and that is entirely a possibility. And that's why we're gonna keep an eye on this euro dollar on a break above 109. Okay, moving right along. Let's see, Friday. We have Mexican inflation. Now, I talked about the dollar mex, how important this resistance is, and how important the 50% retracement is, and this trend line. So we all know that. I don't have to hash that out again with you. But then on Friday we have Canadian and U.S. employment data. Now the market is expecting 185,000 jobs to be created in the U.S. and I think there's been an argument that you have unemployment rate it's supposed to come in at 3.9%. How about if unemployment ticks up to 4, gets that 4 handle again? How about if we don't create 200,000 jobs? How about if we only create 100,000 jobs? Those are things that the market's going to be looking at going into Friday's jobs report. One of the other currencies I think we should just look at right now is and this is ahead of the jobs report, and I haven't looked at the cable. The cable's been sideways. I thought we'd get a little bit bigger of a boost, but I'm gonna do a little bit of drawing here with you guys, and I'm gonna take this, remove that, remove this. We're gonna clean up the charts just a little bit. Okay. All right. Now, what you're going to notice with sterling is, if the dollar weakens substantially, now we already know, there's going to be an upcoming election, and with Sunak, he's now I can't snap election. Is that what they call it? Anyway, that's all known. But look at how well the sterling's holding up. And so I think a lot of the outcomes, if you ask those of you in the UK, maybe you can jump down in the comments below. Ryan has mentioned this as well, that the market already has expectations, and the majority of people that believe the outcome of this UK election is still going to provide stability in the markets, and you can see it's really reflected in sterling. So if sterling breaks out above 128, that could be really, really bullish. And you look at this chart formation, we do have, and I'll draw it out for you guys here. I mean, like a lot of these pairs, you have these triangles that are setting up, and if they all break, whether you're talking about the Aussie, the euro, sterling, you start getting things breaking one after the other. When you're talking about US dollars, it could really, really make the dollar weaken, like a cascading type of event when all of these different currencies are moving at once. So that's why I think we need to be watching sterling if it breaks out above 128. All right. So that's going to really wrap us up for our week. I need to mention really quick once again, guys, make sure you take advantage of this of the sale that we have. And not only the sale, but take advantage of the trader funding program. The volatility is on the rise. Did you guys see this? I want to show you this really quick. Let's pull up the VIX. Volatility is come off of the base. Now you might say, well, we just fell on Friday. We did, but look what's happening in volatility. You guys notice this? We got higher highs, and I bet you we're going to have higher lows. So when volatility starts ticking up like this, do you know what it is for us? It's a playground for us in the markets. This is how we make money. We make money with volatility. So if you want to take advantage of volatility, check out the trader funding program. Let's say you don't want to put your own money at risk. Great. If you don't want to, how can you access larger amounts of capital? Well, you take an assessment. If you pass an assessment, you have unlimited time to pass. You make 10% in a demo account, in a simulated account. You make 10%. You don't lose more than 6% on a trailing basis. With unlimited time, you qualify to trade one of our accounts. That's pretty awesome. And then you're not taking any of the risk because you're trading our capital, not your own. So we have options all the way to $1 million, but as little as $25,000. So it depends what assessment you want to take. So take advantage of this because of the volatility. Anyway, and then also, the pricing on Forex Analytics. Just remember, because when it's gone, it's gone. You guys have this weekend. So get signed up. All right. Now let's talk about some other things that are happening. Gold. I need to talk about gold because we have this double top that's brewing. You guys can see it. The thing about gold is it's not acting well, but then again, the dollar isn't either. So if the dollar, here, let me delete this because I don't want it on right now. Because if the dollar breaks down, gold is not going to break down. Gold, I don't think so anyway. Gold should do this if the dollar breaks down. So don't write off gold just yet. I think we are in this trading range until the range breaks, right? So it's 2450, support is 2280, and we're pretty much mid-range right now. All right. Copper. All right. We talked about the false breakout in copper, but more importantly, now we have a bear flag pattern. So we had a false breakout. Here, let's go back and look at this. False breakout. Yeah. False breakout. We talked about this the last couple of weeks is going to lead to a breakdown, right? So now we're seeing that breakdown. We have a bear flag. But what happens? What happens if copper finds support right here at 440, which would be this high, right? What happens when copper does this? Well, that's when you get the Aussie says, oh yeah, I didn't go down. Then you start buying the Aussie dollar. So if you get a bounce in the copper market and Aussie hasn't gone down, Aussie's probably going to surge to the upside. So just keep that in mind as we discuss, the possible outcomes in copper. All right, crude. Crude was in a very tight, well, it still is in a very tight range, but look at the price action in crude. So we broke highs right there, and then we just fell. Now, notice that rejection is the underside of this trend line. So, and, the fact is we had a false breakout. That should lead to a breakdown. And if that is truly the case, let's delete this. The question is, how far can we go? And the answer to that question, in my opinion, is at least to 75 bucks, maybe as low as 72. Now, can we go lower than that? Sure. But the only reason why crude's going to start breaking below 67 or $68 is because not only the US but the rest of the world's gone into a pretty severe recession. Unless you're seeing something different than me, I think that is a risk, but I don't think that is a clear and present danger to the global economy. Some of you could argue. Jump down in the comments below if you do. Now, we have the bond market we should probably discuss too. I want to talk a little bit about yields because this is going to have a really big influence on what happens in the dollar. Let's go find that 10-year really quick. Dang it, there it is. Okay, so here's 10-year. Now notice that we found support ahead of triangle support in the bond market. So we've been in this descending channel that we've talked a lot about in the bond market, but now it's forming a triangle. And the fact of the matter is, if yields come down, that means the bond market 10-year is probably rallying and maybe even getting back above resistance. Okay, so in bonds, if you think about it, from a risk reward perspective, like you're a pension fund or you're a institution that owns a lot of ETFs and you're a hedge fund. Like, man, I think we've caught a lot for the first half of the year. I'm gonna go ahead and book some profits. I'm gonna buy some treasuries and I want to take home a decent yield and not have to worry about it because that's the safest investment, right? Bonds are an option, and that's why I think that despite all the supply that's been hitting the market, there still is going to be an appetite, especially after this big of a run in equities. So got to watch the bond market. If the bond market catches a bid, yields are going to come down. Dollar's probably reflective of that, and it could be happening because U.S. economic data is weakening. That's a possibility. All right, let's talk about equities really fast, and let's go into the. I don't only want to talk about what's happening in the S&P, which we will, just look at it. So you can see the S&P. I think we know what our ranges are. We talked a little bit about this here, but let's take a look at other markets too. The NASDAQ 100. NASDAQ 100's taken a bit of a spill. We had an obvious reaction on the end of month, but you can see the 38% retracement right here. Let's grab this circle. How about that? And we're going to just realize how important last week's lows were in the NASDAQ 100. Take a look at what's happening in the Russell. The Russell is still holding up pretty well. This is showing you there's been a lot of diversification is not the word I'm looking for. Diversification is not the word you're looking for. Rotation. There's been a lot. There's been a lot of rotation in the markets, and the Russell 2000's, pretty obvious. You've seen NVIDIA, a big reversal in NVIDIA. I don't know if let's pull this up. Let me just show you guys this. NVIDIA has, which is arguably one of the bigger stocks to be watching right now. It just finished filling its gap, but you've seen a lot of money come out of NVIDIA, which means that money's now being poured into. You can see it come into the Russell. You can see it come into the Dow. After the Dow was pretty oversold, we're bouncing, trying to create a higher high once again. Matter of fact, this is probably a decent trend line to be watching in the weeks ahead in the Dow. Right? What happens here, right here, probably is going to mean a lot. Bulls don't want to see that break. In other words. But you're also going to see a little bit of weakness in European markets. You can see that the German DAX is also closed in breakdown territory. That's not what I wanted to do. I'm trying to grab that. You can see. All right, don't irritate me anymore. There we go. Okay, you can see how we closed in breakdown territory for the week. Something to be paying attention to. If you look at like the FTSE and other European markets, they look a little vulnerable. Let's see. Oh, I was like, did I spell it wrong? Okay. Let's just grab one of these. I'll just grab that. That's fine. So you can see the FTSE vulnerable. We've had a bounce back, but after such an aggressive sell-off, we're bouncing back. We're at the 50% retracement. My expectation here, for those of you in the UK, is we're going to see something that looks more like that, like this, right? So just keep that in mind if you're looking at some of these European markets. So you can see they're kind of breaking down. Also, I guess while I'm here, let me also mention the Nikkei. I mean, look at the Nikkei. Nikkei is, this is a 4-hour chart, but I want to just draw this out for you guys because it's drawn out on my other charts that I use. We are in a bear flag pattern. Now, that doesn't mean that it's going to follow through, but if it does, you kind of know exactly where we're going to go. So just, be watching that really carefully in the weeks ahead. One last thing I wanted to also talk about really quick is Bitcoin. One of our traders, Chad. Hey, Chad. Hope you're having a great weekend, buddy. I was looking at this as being a possible bull flag pattern. Where we're just challenging resistance. Chad mentioned, could this be a cup and handle pattern? And the answer to that question is, yeah, it could be. I mean, we have what could develop as a cup and handle pattern. So we're going to have to watch it fairly carefully, especially if we hold these lows. So it's to be seen, because I've kind of been thinking this is a false breakout, so we should see some downside. But if the downside is limited and we just continue to hold up, maybe Bitcoin is a cup and handle pattern, which says Bitcoin's going, probably over 100,000, in the weeks and months ahead. It's entirely possible. So just keep an eye on Bitcoin. So this is the point in the show that I want to talk about what happened last week. And then I'm going to give you the best setups, my 3 best setups for this week. So the 3 setups that we had for last week is, number 1 was buy the euro above 109, target to 110. Well, it didn't happen. We didn't break above 109, but I'm going to say, hold your horses really quick. Even though this didn't happen yet, doesn't mean it won't happen. So I'll come back to this. The next setup was sell dollar yen on spike to 158.50 for a Gartley pattern. Well, as you saw a little bit earlier, we didn't make it to 158.50. Matter of fact, we stopped short around the 157.60, 70 level, and it still might even be a Gartley. So I think I had the pattern right. I just didn't have the right level. We didn't make it all the way to get up there. So the euro scratched because it didn't get to our level. Dollar yen scratch, didn't get to our level either. Okay. Our third one from last week, short S&P on a break of 52.35. So that unfortunately did not work. I'll tell you why. Because end of month, end of quarter, we broke below 52.35. Well, I should say it worked until the last couple hours of Friday. So I'm going to count it as it didn't work, but some of you may have shorted it and actually made money. The fact of the matter is, by the end of the week, we closed higher. Thank you, end of month and end of month flows. You can suck it. So, not you. I'm talking about end of month flows. Anyway, so I would say two didn't work. Two of them didn't take place. One of them, we're going to call it a loss, because by the end of the week we closed higher. But like I said, some of you may have, shorted the breakdown and made some money. Anyway, what are my three setups for this week? Well, I'm going to tell you this much. Go back to my original comments where I said the dollar looks vulnerable. It does. And matter of fact, all three of my setups are currency setups. So let's start with number one. Going back to the euro. So a repeat of last week, a break above 109, we're looking for 110. And then maybe, from there we come down. But we'll see. We'll see about this green. This is just what I was thinking last week. And I still think it's possible. But, at some point we're going to break out of this triangle. So maybe I should actually delete that and say we're just looking for a move to 110. What happens up there? We'll see if we get there. The next one, I know you're going to think I'm crazy, but I'm looking to short dollar CAD. I'm looking to short dollar CAD on a break below 135.90. My target would be around 134.50 to 135. So somewhere down here. Somewhere down in this area. Now, I am, like I mentioned earlier, when I went through the Canadian analysis, I'm actually looking to turn around and be short Canadian dollars, maybe long dollars, but really just short Canadian dollars as a whole. So that's what I'm going to be looking for in the weeks ahead. But I think the dollar Canadian looks vulnerable, and I think all those stops below there look vulnerable as well. Last but not least, my third currency setup. They're all dollars, baby. The Aussie, a break above 67 cents, and I'm going to try to buy with both fists, both hands. Maybe I'll even try to find somebody else's hand to be buying this with. But a break above 67 cents. Now, I said 67 cents, but the resistance is 67.50. That's because the whole name of the game when you're trading is us before them. So if we get in at 67 cents, everybody else is buying at 67.50. Let's call it 15, 20. We've got a 20 pip head start on everybody else. That's what the name of the game is. So anyway, guys, gals, if you enjoyed this video, make sure you give myself a thumbs up, give the team a thumbs up, and make sure you're checking out Spotify or Apple Podcasts or whatever to watch the day ahead or listen to the day ahead 5-minute podcasts. Those are going to be released sometime this week. We're going to start those. So if you missed the F.A.C.E show because you had to take the kids to school, or maybe you were driving to work, but you want to listen to a quick 5-minute excerpt of what we just covered on the F.A.C.E show and what I'm looking for going into the rest of the trading day, make sure you're tuned in there. And if you love this content, thumbs up, subscribe to the channel, join the Forex Analytics community. Don't miss the sale price that we have going on, because once it's gone, who knows if you have to wait until Christmas or the holiday season before you get a discounted amount again. So, guys, gals, thank you very much. Have a great remainder of your weekend, and thank you so much for spending your time with me, because I know it's so valuable to you. I'll talk to you soon. Actually, I'll talk to you on Monday. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.